Hey, look, as a healthcare owner, it's very easy to let your finances slide. You're constantly juggling priorities, patient staff operations, and somewhere in the midst of that chaos, your financial health takes a back seat. Don't ever let that happen. Today, we're breaking down the key points from our practice financial checklist, the exact areas you should be monitoring to make sure your finances are optimized and your practice stays strong. You can grab the full checklist at our website, econologicsfinancialadvisors.com. You can go to the download section and it's right there. Remember, the solvency of your organization is not optional. It's essential. Get after it. Enjoy the episode. Practice owners, tired of working hard but not seeing the financial results you deserve? I'm Eric Miller, and my best-selling book, How to Become a Financial Beast, is your game changer. Learn how to maximize profits, pay yourself right, and build wealth outside your practice. Download now for free. Okay, welcome back to the Financial Beast podcast. I am your host, your BFFF, Eric Miller, and I am here with, of course, my underling. And we, of course, are here to talk to you about all the things finances that you should possibly know. So Econologics Financial Advisors, we offer premier financial advice for practice owners and associates. We show you how to acquire, control, and invest your money. Like that, don't you?
Nice. I do like that.
Yeah. So that you can be financially independent and you can exit out at the top of your game. You guys can check us out at econologicsfinancialadvisors.com. Go to our website and, of course, do us a big favor and make sure that you give us a like or a share or a subscribe, just so that we can make sure that we know that people are out there listening. And then share it with other people too, especially owners and associates that you guys know that need help on finances. Okay. That being said, I just had a conference this week and, it was for physical therapists. It was awesome. Shout out to Nathan Shields and Adam Robin for putting on a really, really great event. They had about, it was over 100.
Nice.
100 people there, probably 140. And yeah, it was everything related to how to win the game of business and finances, but yet also make sure that you kind of keep your healthcare focus. You're given good healthcare as well. I mean, you can do all those three things. They're not mutually exclusive of one another. Like, you can have money, you can have a great practice, and you can do good medicine all at the same time.
Yeah.
So
definitely.
Yeah. But we were talking in terms of business finances, and let's face it, most people just don't like to confront this area very much.
Yeah.
Personal or business finances, and got me thinking, like, didn't we write a checklist one time of what what an optimum business would look like in the finance area?
We definitely did.
We did, didn't we? So we pulled it out, and I'm reading it, and I'm like, oh, God damn, this is kind of good. So we're going to go through a couple of the points. Now, if you guys want to get a copy of this, you can always go to our website, which I do believe it's on our website. It's called
It is. It's under free downloads.
Yeah, it's under free downloads. It's called the 27-point checklist. And I would encourage you guys to go through each of the points. Now, we're not going to go through all 27. We'd be here for like 5 hours. But we're going to go through some of them and make sure that you guys are doing this in your practice, because you have to. Like, you have to,
Yeah, these are basics.
Yeah. Or you can just kind of continue to suffer through and never be able to have a practice that rewards you at the end, pays you at the end, and then you're constantly in anxiety and stress about money all the time. So I think if you did all these things, you really wouldn't have any problem with money. As I go through them, what one kind of jumped off the page at you going through this right now?
Well, the first one that jumped off the page to me Well, it's not necessarily the first one. It's just the first one I want to go over.
Yeah.
But it's something I've been running into a lot recently. And I think it's something we've probably always dealt with. It's just standing out to me. But that is the company financials, profit
Yeah.
and loss, balance sheets, tax returns. All those important documents should be easily and quickly accessible and kept up to date. And I mean, you sat in the chair for many, many years, how long it can take
Yeah.
for people to get you a basic. I sometimes wait literally months for a client to do something that I know with QuickBooks. You put in a username and password, you click about 4 different places, and you generate a report. I can literally do a P&L in less than 30 seconds.
Yeah. It should be that way. And there's really not really a good excuse of otherwise, other than you've really never sat down with either the person that's doing the bookkeeping or your CPA and
Yep.
just said, I need to be able to access this myself. Okay.
Yeah, it's either an access issue or it's even worse, the people that just don't ever have anything up to date. Oh, my bookkeeping is still, I still need to finish August. Well, dude, it's October.
It's October. I know. I
know?
mean, and this is all symptomatic of bad habits. And, it's not like those people are all broke, but it is an indicator to me of like there are things that aren't being addressed, and there are holes that are going to eventually catch up with that person by not being able to do that. So I agree. I mean, it's really simple, you guys. You should have, obviously, there's an annual profit and loss statement. You should keep them up on a monthly basis. You should actually review them. You should have a balance sheet that's updated. I know cash flow sheets are probably not as, I don't think people look at them as frequently. You should, but I think those are going to include, your actual cash flow of what, you're keeping. But those things need to be kept up to date. So I agree. I think those are things that would be part of someone owning this area. I'm going to do this one right here. The individuals in charge of collecting money are willing to ask people for payments and encourage people to pay. I should change that to encourage people to pay. Maybe I say should just force them to pay. Maybe that's too strong. But, this goes back to like the front desk people or the people that are in charge of asking for money.
Billing,
whatever it is.
Yep.
Like those people need to be clear of focus. They need to know exactly what their job is. They need to have a mentality of, I'm going to get that money. And you need those kind of people on that post. 100%.
It's very true.
Especially like asking for co-payments and everything like that. And, we'll get it next time. And then, it's only $20 or it's only $40. And then, all of a sudden $40, you multiply that by, 100 patients, do the math. So you really need to make sure people are collecting money. And if you guys are having issues with money right now, I mean, these are some points that I want to make sure that you get in, start looking at, start inspecting the lines to see where things are going bad or going well. So getting people to pay or people in charge of collecting money are collecting money and they're doing it. That certainly is a requirement.
Yes.
Okay. What else you got?
So I like the one, the facility capacity income goal is calculated incorrect.
Yeah, you probably have to explain what facility capacity.
Yeah, that's what I was going to do. The facility capacity income goal, basically what that means is, okay, if my practice is fully staffed and I have all the doctors or therapists I can fit and everybody's schedule is full, how much money can my practice produce?
Yeah.
And it's really just a measurement of basically how, what percent efficiency is your business currently running at?
Yeah, what's highest and best use of this facility? What is the
Yep.
highest and best use of it? So again, this goes back, hey, if you're going to look at your practice as an investment, you want to get maximum output of any investment that you have. And one of the ways that you measure that is the facility capacity, income potential. Like what?
Yeah. And I was going to say the other piece to it too that I use it for as an advisor is expansion. Because
Yeah.
if somebody's capacity is, say, $2 million and they're doing 1.9, if they want to add on to their building or whatever it may be, they're probably in a pretty good place to do that. If they're at
100%.
1.2, well,
Yeah.
maybe not so much.
No, that's 100. That's right. I mean, I think the number you should probably be at, because you're never going to be at like 100% capacity and then make a decision to
No.
expand. But if you're probably in that 80 to 85% range,
Yeah.
then I think it's time to start looking at expansion. And
Yeah,
if
you're
you're up,
never, 85, maybe close to 90% is as
yeah,
close as you're ever going to get because you're never going to have 100% of people show up. No
no,
matter,
you're not. Yeah,
doesn't
you're going
matter
to
what you do.
always you're going to have something there. So there, kind of builds in that factor of safety. But I
Buffer.
agree. You need to have that is one. If you're at 40% or 50%, number one, you got to know what your facility capacity potential is. If you don't know that, then you're like, once you know that number, and then you have something to work towards. Now, I think, and I'll do my next one, which is making sure that your make break number for the business is calculated on a weekly basis. I mean, you could do it monthly, and is correct. So the make break number is different from the facility capacity number, because the make break number is like, what do I need to bring in that allows my practice to pay its expenses? And that is inclusive of my profit accounts as well.
Yep.
Okay. So your make break number is not just, your facility expenses and your payroll and your, divisional and overhead expenses, but it also includes your profit. And
Yep.
that's gonna vary from practice to practice and area to area, but it should be as close to 20% as you possibly can in most types of practices. Okay. But you have to calculate that, I mean, at least monthly, and making sure that you're bringing in that amount, but it has to include your profit accounts. Okay. So the game is really simple. It's like, let's get my make break number correct. And then let's know what my facility capacity income goal is. And then my job is just to work towards that,
Yep.
work towards that. Okay,
Yep.
good. What's
And
another one?
if you're hitting those two, well, I shouldn't say if you're hitting those two. If you're hitting the make break and you're reaching towards the capacity, the next one shouldn't be an issue. And that's paying off your business credit cards every month.
Oh yeah, that's definitely, if you are accumulating a lot of business credit card debt. Now this is separate from like the loans that you guys have to do build outs, or maybe the real estate loan, or a practice acquisition loan, or something like that. That's different than you just having credit card debt, because you didn't have enough money to cover paying off all the costs of goods sold that month, or whatever, whatever. So yeah, you should definitely, the business credit card debt should be paid off every single month. That's no doubt. Another indicator, how much you have in business reserves to cover expenses.
Yep.
Well, I think we have on our list, you should have at least 2 months of business reserves to be able to cover your basic expenses. Okay. And it's a big number, I know, but it is part of like what you're allocating every month. That's part of your make break number, is how much am I going to allocate into business savings? And then, and in some cases, I'm sure you have some people that have $50,000 in business savings. And you probably have some people that have $500,000 in business savings.
Oh, absolutely.
Somewhere around there. Now, then I got a question this week of what should I do with my business savings? And I'm kind of under the impression, well, the more that you got, the more important that it is.
Yeah.
Right. So
That's a great answer, actually.
if you have 50 grand in business savings, just keep it in a business savings account or maybe a business money market account of some kind.
Yeah. Keep it liquid.
Yeah, just keep it liquid. If you have, if you have 500,000, if you have 800,000, if you have, I don't know, what's my level? I'd probably say probably anything north of 300,000. Then I'm starting to look at, okay, well, I still want to keep it in the business. Fine. We can do that, but open up like a business brokerage account and let's see if we can get a bit higher yields on that money than you're going to be able to get at a bank. And I think that's certainly something that we've done with a lot of people. And it's usually just in some kind of a short-term treasuries. It's, short-term fixed income instruments that allow us to get, even a 1% to 2% higher yield than what you're getting on, a money market or a checking account.
Yeah.
For sure.
Yeah, but that 1% to 2% starts to matter when you're talking 500,000 or
it
starts to become a meaningful amount of money.
Oh, there's no doubt. I think most people, if we looked at, and I'm sure we could probably even do this, I'd say most people that have over $500,000 is sitting in a business checking account, probably earning maybe 2%, maybe.
No, not on a checking. No,
not even that. Okay. So maybe
half a percent,
maybe a 0.5%, where you could own the same business brokerage. You could own a business brokerage account, same business name, have it in treasuries, earning 4.5% on $500,000. That's 20 grand a year in interest.
Yeah.
Compared to what you were earning, which is, maybe 1,000, if that. So
exactly.
Yeah, that's definitely something that's you guys got to keep an eye on. Okay. Some other things too on this list. You see anything else that you like on here?
Yeah, there was one other one that I liked, and I like all of them, but there's one other one that I wanted to go over, and you might be looking at it because I know you love this one too, but I'm going to pick it before you can. Any dips in income?
Oh yeah, I wasn't looking at that
business.
But nice. I wasn't looking at that one, but you are right. That's right.
I remember when I was an assistant, I used to sit outside your office in my little cubicle, and I used to hear you just hammer this into people. So I've always done the same. But any dips in your company's income are addressed immediately.
Yeah.
You don't ignore it for a month or 2 or 3, see if it fixes itself. Not that if you have one down day, you have to be in cracking heads, but you should obviously be reviewing your finances or your income numbers, at least monthly. And 1 month is a long enough time period where you can say, okay, well, what's going on here, and start inspecting a bit. You know.
So that would be like in our office, like when we have a down month, Diane just says, it's okay, guys, everything will be okay. And she just, says it's no big deal. We'll see if we can get better the next.
When we have a down month, Eric forces all the hourly employees to work unpaid extra hours.
Exactly. So my point is that we do not, like, if there is a dip, it's just, that's what it is. It's not an indictment. It isn't a, geez, look what you did. But it is like, hey, there's a reason why it's down, right? We didn't see enough people that month. We didn't talk to enough people. We didn't help enough people. We didn't get enough people to accept the recommendations that we made. It's very simple, right? And
no,
it's not like we're you're sitting there, you have to rail against everyone. It's like, guys, we just didn't do the usual actions that allow us to be above our numbers. Okay, so we just have to get back to doing that, and you got to actually do it. Okay. And that's all. But when you just let a dip just kind of no big deal, and you don't like say anything about it, or you don't go in there and figure out like why did we have a dip?
Yep.
Like that's on you. You know, that's on you if you do that. So you have to like take those things, take the statistics seriously. And if it's down, it's down. That's all it is. Okay, it's down. Get it back up. And address it
Yep.
immediately.
Yep.
Let me do two more that I think I like on here. Obviously, only trusted individuals are allowed to have access to company financial data and check writing. Kind of goes without being said. If you put someone that is, you just can't give financial control or responsibility to someone that you aren't 100%. And even when you are 100%, you are looking at that person all the time and making sure that they are keeping everything above board and transparent, and they're not getting like, why are you so interested in this? You know what I mean? Like, they're getting like, giving you pushback or attitude or critical, those kinds of people, because they're doing something bad or they're just flat out ripping you off. So you have to make sure that those people are in excellent like shape, so to speak.
Yeah, and even then, unfortunately, the reality is you still have to check because
And you still have to check. Yes.
you know this. I have this happen, I don't know, probably 3 or 4 times a year where a client gets stolen from, and probably 8 to 9 out of 10 times, it's never the new employee. It's always somebody who's been there long term, who's trusted, who had something happen in their life, and for whatever reason, we're able to self-justify this as okay.
Yeah. It's almost never the new person. It is always that freaking old practice manager that's been there for 30 something years.
I was just going to say, I just had a client who, a vet, and it was the office manager who was an absolute beast on the finances when we first started working together. But something happened and she flipped a switch and she went from being an all-star to a thief.
Yeah. Yeah, I know. This is what I'm saying. It's like,
but she'd been there like 18 years.
I know. Like I said, it seems to be always that person that's been on that post forever. You just kind of take it for granted that they're going to do their job. You guys can't take it for granted. You can't just, like, as much as you want to reward loyalty, and I think you still have to demand a product, and people, you always have to make sure that, people are giving you the fruits of their labor, and you know them by the fruits of their labor, so to speak. That sounds, kind of cliche-ish and everything like that, but you can't ride the coattails of what I did 7 years ago. Okay. You have to make sure that people are continuing to produce, not only for your sake, but for their sake as well. Because once you get somebody that's just kind of not producing and not doing anything, it's actually going to be worse on them than it is on you. But it's going to be pretty bad on you. I think there's one more I want to go over. And that's obviously you got to pay your people on time. But bonuses and commissions are paid based upon production and organizational solvency. So this is another one where I've seen people that are bonusing their people and they're completely broke, or the organization is under like its make break number, but I still have to bonus my people and such. And it's like, how? Like you're broke. Okay.
Yeah, you can't bonus when you're losing money per se.
And I get it, because you're like, well, if I don't do it, then I'm not going to keep them. I'm like, you're not going to keep them anyway, because this place is going to go under at some point in time. Maybe not today or tomorrow, but you're going to be unhappy. They're going to be unhappy. It's all going to end really, really poorly. So guys, just make sure that that, when you're doing your calculations of how your bonus system, make sure it's predicated on the fact that it has to, like, one of the stipulations is that the organization needs to be solvent, however you want to define that. There's more money coming in than what's going out. And, anything that's over that, that's what we're going to pay the bonus system on. Okay.
Yeah.
So that way it ensures that you're keeping all your other buckets filled at the same time. So I think those are some good points right there. So yeah, guys, I think we hit a lot of them. We didn't all 27 of them, but we hit a lot of them. And those things that we talked about, if you do them really, really well, then it should allow you to personally have money, and it should allow you to personally have money so that you can give to people like us, so that we can show you how to invest it, right? And we can show you how to personally get out of debt and handle your assets, and have organization and have predictability and multiple income sources and all those fun things that you want to do. But it starts at the business level. You got to make sure that you get that area in really, really good shape.
Yeah.
Okay, cool. Anything else?
No, I think that's it for now.
All right, guys. We'll see you on the next podcast. Be well.